Okay, this is an important article. It regards the oil price. It's by CNBC News. It's oil slides, and one technician has a shocking prediction. Expect crude to hit $90, he says. Crude is on track to double its price per barrel, according to one technician whose bold call in the futures now trading market leaves traders scratching their heads this week. Crude saw its worst day in 2 months last week, plunging more than 4% alone on Thursday. This commodity also dipped below $46 a barrel for the first time since November 30th of last year and is down more than 15%. But Bill Struzzo, chief marketing strategist at Bill Curve Trading, who correctly called for crude's plunge to the $30 range back in 2013, said oil could be on the verge of a massive rally that would send the commodities to levels not seen in 3 years. He said, I think over the next few years, it's not out of the question that you push the $80 to $90 envelope per barrel on oil, Struzzo said in a recent interview with CNBC's Futures Now. That's nearly a 100% rally from where the commodity is currently trading. According to Struzzo, the dramatic shift in supply and demand dynamics that sent crude plunging from its high of more than $100 per barrel in 2013 to its low of $26 in February 2016 has created a new normal for the commodity. The whole pricing structure has shifted lower, but when you look at the new structure, the bottom is still around $30 a barrel. We think fair value is up around $60, and probably the upper end of that range is $80 to $90, he added. Along those lines, Goldman Sachs said in a research note that the broader picture for oil remains supportive. It's supportive of higher prices despite waning demand from China, one of the most voracious energy consumers on the planet. The bank added that it expects robust demand growth in 2017, particularly with OPEC members appearing to hold the line on production cuts. Struzzo emphasized that the more positive global outlook could boost demand over the next few years. When you look at the bigger picture, you still have a situation where you have a recovering economy in Europe, and we have a stable economy here that should be on the mend, explained Struzzo. So you still have pretty good demand going forward. Now I want to add something to this. I think that in the short term, because of what the Federal Reserve is doing and trying to support the dollar, in the short term, we're going to see a deflationary event, and it could be quite a significant deflationary event. Until that deflationary event ends, and the Federal Reserve goes back on their hawkish policies and goes back to a more dovish policy of quantitative easing, I personally think they're going to go back to quantitative easing, and also probably have to do other forms of stimulus. Maybe not exactly helicopter money, but something in the order of some sort of stimulus to stimulate the economy. When they do that, we're going to see a real recovery, I think, because we were on the verge of an economic recovery until the Fed come along and started raising interest rates and started supporting oil production in the Permian oil basin. And also they're threatening to dump their balance sheet onto the market, and gosh knows what that'll do. That's never been tested before. It's never been tried before. So what we're looking at is, we're looking at a little bit of turmoil coming up with a deflationary event that's coming, and that's going to have its effect on the gold and silver price, a deflationary effect. I think we're already actually in it right now. How far the Fed will go with this before they cause a major market correction, and as soon as they do that, then the Fed's going to reverse. They're going to try to turn the ship around, and it's at that point that the oil price is, and everything's going to go up, because we're going to be looking at a probably after they come back with accommodative monetary policy, the stock market will surge. So probably what we're in for is, in the short term, we're in for a market that's very slightly going downwards. But I think that when the Federal Reserve raises interest rates next time, I think they're going to get away with it. But the market's going to be not the market. They're going to take the wind out of the sails of the market, but I don't think the market's going to crash. I think they're going to get away with the next raise. It's the raise after that one, I think, that's the one I'm predicting that is going to bring a market correction. Now, how big that market correction is, I don't know. But it's that one. It's probably in the fall, a market correction. That market correction is going to cause the Fed to reverse direction, to try to turn the ship around. And when they do that, that is when we're going to get our real recovery, because they're going to pump tremendous amount of money into the system at that point. They're going to loosen up the floodgates of money. And that's when the dollar is going to start to go into its final death throes. They're going to start to actually start to destroy the dollar at that point. But we're going to go through then an economic recovery. And it's going to feel good at first. But that's what's going to lead to the crisis. And so the timing is starting to become clearer as the days go by, in my mind, how this thing is playing out. As the time goes by toward this crisis, we're going to see it become clearer and clearer. The picture will become clearer and clearer. So thank you very much for listening. Like and subscribe, and we'll catch you in the next article. Bye.